Welcome everyone to our Professional Liability Basics webinar. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I am glad to introduce Kevin Wills, who's Second Vice President of USLI, and he's an expert on Errors Omissions Insurance, and so he will be our instructor today. I also want to introduce Lexi Johnson, who's our professional liability underwriter here at CID, and also introduce Jacob Cole, who's our marketing coordinator, and he makes everything run behind the scenes, so it's seamless. So let's get started. There's a couple logistics. As you know, by now, everyone is muted. You will be able to hear, but you won't be able to speak. But your voice is important, so please pose your questions in the chat room at any time throughout the webinar, and we will answer them as we go. There will be a short survey at the end of the webinar, and we really would like your feedback if you have any suggestions or ideas. We appreciate it. So without further ado, I'm going to introduce Kevin.
Thank you, Anae. I apologize for that. I stumbled on the fact you called me an expert in E&O, which I don't know if there is such a thing, especially in the miscellaneous space where every day it's something new. So it's good. As an underwriter, it's a challenge that I love. So with that being said, let's start to talk about why we're here. So really why we're all here is to understand E&O a little bit better. Understand the difference between general liability and professional liability, learn about who needs E&O and why it may be important, and then we'll delve slightly into the legal side of E&O. What does a claim look like? So I'm going to start, which is strange, I'm going to start with general liability. And you're probably looking at the first slide here saying, why are you starting with general liability? I signed up for an E&O or professional liability webinar. And the reason is that for many people, liability is liability. I can't tell you how many calls I've gotten from agents that say, oh, I need a liability policy. And my first question always is, well, what type of liability policy? And their answer is, what do you mean? I just need liability. So there are big differences between GL and PL. The good thing is that PL, being professional liability, is now being required more and more often via contract. So that has really driven the need in the marketplace for professional liability. Are there claims? Absolutely, but the need is being driven by contract. So let's talk about GL real fast. I am pretty sure that most of you are familiar with GL, and I am not a GL expert, so I'm just going to go into the basics of what I believe GL coverage is. So GL coverage, what is it? Bodily injury and property damage as a result of the organization's operations. Personal and advertising injury of the organization, products and completed ops. Your traditional stuff, these are things that are most likely covered. Slips and falls, property damages of others, libel, slander as a result of the organization's communications. So in their advertising, libel, slander. Sales of products, damages to premises rented. All things I'm pretty sure you've all seen in either a BOP or a GL policy. Sometimes, it depends, you'll see coverage for a few things. You'll see abuse and molestation. Some policies, not very many anymore, will give you E&O. Maybe they'll give you an endorsement, a $25,000 sublimit for E&O. It's not common anymore, but you do see it. You know, you can get some auto, you're hired not owned, or you'll get some coverage for special events, some host liquor, things like that. The things that are typically or almost definitely excluded are automobiles, workers' comp, liquor, pollution, EPL, and data breach. So I'm sure there are other sessions where you could learn about all the EPL exposures that are out there. Cyber is his own ball of wax, so there's a ton of things going on in the cyber world. I would recommend that everyone on this call also attends a cyber webinar at some point just to kind of learn about it, because it's definitely the driving exposure in the marketplace today. Here's what you really want to look out for when you have a GL policy. And the one I want to focus on mostly here is the professional services exclusion. So as I said, almost every policy that I know of the GL policies exclude professional services. So any bodily injury, any injury really resulting from a professional service is not covered, which means you need professional liability. So when that call comes in and it says, I need liability, I ask, well, what are they doing? And then really what I'm looking to figure out is what are they doing? Is this person a professional? Okay, so what is a professional? A professional is anyone who has a special talent. That talent is utilized for their livelihood. They perform services for a fee. Most often it's more of an intellectual ability versus a physical skill. I haven't yet seen a professional liability request for like an athlete. I'm sure they're coming because we get professional liability requests for all types of things, but I haven't seen it. So most of the time it's for something that you're doing intellectually. A common theme, however, is that there's specialized training for it. So for example, we're all insurance agents. We all were specially trained to be an insurance agent. We all are held to a standard higher than those who are not trained when it comes to all things insurance. And that's kind of what makes you a insurance professional. And this last piece, licensed, certified, regulated. So that's a pretty common theme in a lot of situations where professional liability is needed. Again, professional, special skills. Examples of professionals, there's a ton of them. We'll go through many of them. The ones that, when I tell people, back in the day when I was allowed to travel throughout the country, which I miss, but those days are coming again. But when I would go into an office, I would say I'm the miscellaneous professional product leader at USLI. Everybody has a doctor or a dentist or a lawyer or an architect or an engineer. Those are all your traditional type of professional liability exposures or malpractice exposures. You have other ones, insurance agency E&O and real estate E&O, tax preparer, accountant E&O, but there's even more than that. You have a ton of consultants. Consultant is the hot word in the 2000s. Everybody seems to be a consultant in some capacity. They all need E&O. A common theme for all these professionals is that they're performing services for a fee and for others. That's really a key. The services need to be performed for others. So if you're performing services for yourself, that doesn't necessarily count as something that a professional liability policy would pay for. It has to be for others for a fee. And really what malpractice or E&O is, the main driver, the main exposure is negligence. So you were hired to do something, there was an expectation, and you didn't do it. And as a result, you caused me financial loss. That really is the most of the professional liability claims that are out there. So just going through the slide, it's a professional duty that exists. Again, you have that higher standard of care because you are a trained professional. There's a breach of that duty or failure to conform to the standards of that duty. So that's really the negligence. There has to be a causal connection between the contact and the injury. So that negligence has to result in injury. It just can't be negligence. It just can't be you screwed up, I'm suing you. There has to be a financial result of that negligence. And then it has to be damages directly resulting from that act. So again, services provided for others for a fee. One of the key things in professional liability, and we'll get into this a little bit more, is financial loss. So in general, a professional liability policy does not cover strict bodily injury or property damage. It's financial loss. So just remember that. If a client feels a financial loss should have or could have been avoided, they will allege negligence on the part of the professional, and then that claim will be triggered. There are some other things that professional policies cover. The second one, or the first one on the slide here, is intellectual property. And intellectual property is a hot topic. Before the call, we were discussing, what are some of the hot classes in E&O, and probably the biggest one that I'm seeing is it's all media based. So there are your media risks, which is more your broadcasting, your true authors and publishers and things like that. They need media liability. They should be on an occurrence form. That's a separate type of exposure. But really what we're seeing a ton of is your digital marketing, your search engine optimizations, your advertising agencies. They definitely need E&O, and they definitely need intellectual property. So to give you an example of what intellectual property can cover, think about, for example, a Diet Coke can. So if you look at a Diet Coke can, there's a certain design to the diet, and then there's a certain design to how the Coke is written out. At times, you'll see people try to almost utilize that same type font format in advertising their own goods. I can tell you right now, companies like Coke and Pepsi and all the big ones are always out there monitoring, seeing if people are trying to use their trademarks. And what they usually do is they'll come after you asking you to stop, and then they can go ahead and sue you for abusing their trademark. Where that comes into play in E&O is that it's the advertising agencies that typically come up with the campaigns, and they're the ones that come up with the designs, the logos, and things like that. If there is such a suit and a client is sued, the very first thing they're going to do is turn around and sue their graphic designer or their advertising agency for the intellectual property claim that they wind up paying. It's a huge exposure. The claims tend to be big when they happen. You want to make sure that your E&O policies, if you're insuring anything in that marketing creative space, has intellectual property. All your forms don't necessarily have that. A lot of times it's available by endorsement. So something to keep an eye on when you're writing professional liability. This other one is violation of statutes and regulations of governing bodies. So you have consumer protection laws, whether that's TCPA, Telephone Consumer Protection Act, fair housing regulations, more for property managers. You want to make sure that if you have certain exposures, that though there are buybacks within the E&O policy. And most carriers will offer it as an extension if they're willing to cover a certain class. So property manager, they should be giving you things about fair housing. Consumer protection law, it depends on the classification. It depends on if the carrier is willing to give you that additional coverage. All right, so who needs E&O? Here's some old statistics. I hate going through statistics, but I can tell you this. E&O is exploding. It's one of the few things that throughout the pandemic still continued to thrive. And it's interesting. I mean, especially in the beginning, it was technology consultants or to anybody involved in technology. Why? Because we were all using technology. So all of a sudden, the need for people helping you to hook up your computers or do remote desktop and networking, that was a huge boom and continues to be a huge boom. So tech companies are thriving. In the beginning, there was a lot of consultants that were out there, and they were helping people, whether it was education. How do we develop a curriculum that's conducive to online learning? Or consultants, how do we deal with continuity with our staff as we all work remote? So there was a lot of that. As we turn the corner, you're starting to see other types of E&O. You're starting to see a lot of interior design. I guess since everybody was home, all of a sudden everybody realized, hey, I would like to fix up my house. Interior design, construction, architects and engineers, all of that is exploding. So I don't think I've ever been busier in my time in the 15 years I've been product leader for our miscellaneous professional product than I have been this year, which is different than a lot of other people who haven't been as busy because the economy was slowing. So I always say this, and I mean it. And I can tell you, after talking to a lot of people on the phone over the last 12 to 24 months, this is very true. Knowing a little bit about professional liability gives you such a leg up over your competitors. So many people understand property, understand GL. Almost every agency writes it that handles commercial. Not everyone handles professional. Just knowing a little bit about it, even enough to go after it, and then utilize partners like CID who are absolute experts in professional. Use them as your resource. It will definitely give you a leg up. It will allow you to bind the professional liability, and then along comes those ancillary GL property policies. So I can't stress to you enough, just knowing a little bit, understanding what it is will go such a long way. And again, these statistics are just proof of it continues to grow and grow and grow. Basic examples we talked about, lawyers and doctors and dentists, architects and engineers. Again, traditional exposures. Everybody on the call here probably has heard the term medical malpractice. It's traditional stuff. What isn't necessarily as traditional is all your technology classes. They all need E&O, whether it's a website designer, a custom software. A huge class for us that we're seeing a ton of is a managed service provider. So that's something that is a big class, big premiums. So it's a nice one to go after because they grow quickly. Their revenues are high, and professional liability is usually based on revenue. So that's a great class. Staffing is another one that's great as the workforce, starts to come back. There's been a shortage. Everybody seems to be looking for people. Employment agencies are helping fill that gap and bridge that gap. And what's good about employment agencies is not only do you get to insure the employment agency, which is wonderful, in a lot of cases, especially tech staffing firms, you'll get the tech staffing firm, and then what you'll get is every individual that they place. Because again, everybody seems to be requiring professional liability as a requirement to work certain jobs. Like a lot of tech people are independent contractors. They're required to have $1 million liability policy for both professional and GL. And we have great markets for that. The private investigators, background checking services is one riddled with claims. We'll talk about a couple as we move forward, but that's one. Absolutely make sure you have professional. Anything to do with consulting, whether it's management consulting, human resource consulting, anything to do with human resources, especially out in California, is huge. So that's definitely a class that's pretty hot. Anything to do with training, speaking, they all have exposures. Other examples: insurance agents, claims adjusters. I have something, a situation that I'm dealing with now, and a claims adjuster we'll talk about. Accountants, definitely exposure. Billing service, another one that's riddled with claims. So anything in this column on the left here, make sure if you're insuring any of these for their GL and property, they absolutely need professional. You have real estate agents, property managers. You have allied healthcare is a big one, seems to be growing. I see a question came through. Thank you for the question. Very interesting question. It talks about contractors E&O. And the question basically is, what's the difference? It's been a question we're trying to figure out as well. It really is a general liability type exposure that E&O policies are looked at as excess to the GL. A lot of professional liability carriers are reluctant to cover contractors E&O because really what it is your general liability exposures. So a lot of times we want to leave it to the GL carrier. But the funny thing is that we continue to get requests for contractors E&O. So I don't know if I explain what the difference is. There really isn't much of a difference, but the difference really being that the exposure is bodily injury and property damage, and a GL policy is designed to cover, products and completed ops. That's what a GL policy is designed to cover. The E&O policy comes into play sometimes for the design component of a job. So you'll see there's more of a blend. Let's say for the question you asked was plumber. So maybe they're designing a plumbing system for a large building. So that design exposure may be what people are looking to cover the E&O. That's why they come to an E&O carrier. You see it more on a lot of this is general contractors, where before you used to have, and this is, the ideal situation is you have your interior designer that does the design, comes in and says, hey, it looks drapes of this style would look great here, pillows would look great here. Maybe you want to add an accent wall here. Then they would discuss that plan with a general contractor, and that general contractor would then run with it, work with an architect and engineer and run with it. What you're seeing now is that general contractor is acting in a multitude of fronts. So not only are they performing the job, sometimes they're engineers and architects, but also what they're doing is the design piece. So that's where you see the blend of E&O and GL. So I hope that helps. But it is definitely a gray area. Yeah.
Kevin, I also just wanted to mention that there is a consulting aspect that we're seeing a lot out there with contractors, where they're basically acting as expert witnesses and they're providing opinions on things, maybe not doing any work, but actually doing consulting work.
Yep, absolutely. And that's something, the expert witness is something that is a little bit easier to separate than just putting out there an E&O policy for a contractor. Because what really happens is that you wind up paying GL claims when you write it. But that's a great question. Thanks for asking. Please keep them coming. I would love to answer questions instead of reading through slides. So please feel free. Going back to the slides, however, allied healthcare, definitely a space where, especially in the home health area, lots of growth. Marketing, graphic design, event planners, we've talked a little bit about that already. So let's go into what a claim looks like. So these are two claims. I don't want to read the entire slide, but the first one's an accounting type of situation. And really what it is the tax preparer was supposed to do their job. They didn't keep proper paperwork. Next thing you know, someone relied on the tax preparer's work as they I think this is the one where they sold the so they relied on the work and they didn't keep proper documentation. At the end of the day, they were negligent in performing professional services, and we wound up paying a significant amount of money. The second one is a background checking service. I'm not going to read this one, but this is basically one of those situations where they did a background check. They didn't verify the accuracy of the background check. It was used to not hire someone, and as a result, there was a payment. So that's what the slide says. I'm going to give you a better one for background checking services, and this is absolutely true. It happened over the last couple years. So it happened I'm not going to give you the name of the university, but it was in Virginia. And it was a typical situation, just as this slide starts, where it was a John L. Smith applied to be a teacher at this university and was hired and was supposed to start in the fall. This happened in August. I guess it happened, late August. So they hired him, and every time they hired a teacher, they used a background checking service just to make sure that everything was on the up and up, that there were no allegations of abuse and molestation, like everything checked out. They ran the check, it came back, it had allegations of abuse and molestation. They went back to John Smith and said, sorry, John, we can't hire you because of this. John came back, he was indignant. He said, there's no way this was me. I didn't do anything. Long story short, it turned out that they ran John L. Smith versus John W. Smith, and it was rectified pretty quickly. Let's say it was 2 to 3 days, relatively quickly. They figured it, they made the mistake. So the background checking company admitted the mistake, went back to the university, said, we're sorry. The university went ahead and said, okay, everything's fixed. We need you to start in a couple weeks. They thought everything was good. Professor starts a couple weeks later. You're probably talking to a lawyer in some capacity, and decided to sue the university where he was working for the mental anguish that their mistake caused. So in order to avoid lengthy prosecution or lengthy back and forth with one of their new employees, they decided it made sense to settle. And they basically wound up paying this person $100,000, which was a year's salary, just as like a sorry. They did this in connection with the background checking company who worked with the E&O policy to let them do that. So we wound up paying an extra $100,000 to a person who really didn't have any damages. They had mental anguish. I'm not saying it wasn't stressful for a couple of days. Was it worth $100,000? I don't know. But that's the type of stuff that E&O covers. I have, I'll leave this here, but oh, sorry about that. And this is interesting because it really hasn't happened too much, but it seems like things are escalating. So we've heard a lot about escalation of lawsuits, especially in the employment practice world, especially in directors and officers, that type of stuff. But we're really starting to see it in the E&O world. I have $3 million claims on my desk, and all three of them were small business type of insureds. So typically $1 million claim, you wouldn't, you expect them on the bigger insureds. If you write a $50 million risk, you're going to have claims. These were all small ones, and I'll give you a snippet of each one. So the one claims adjuster in Washington didn't do anything wrong at all. Nothing. Adjusted the claim. It was a larger commercial type claim. Went back. They were provided services for their carrier. The carrier went ahead, and the carrier screwed up and for some reason capped out their payment, stating that the limit on the policy was only $1 million. And in essence, they actually had, I think it was $5 million of coverages over the aggregate. Long story short, they were incorrect. They were forced to pay out the additional money. But what happened is there's ways where lawyers can get creative and force decisions upon carriers to either accept or deny claims. And it's a time limit demand. And in this particular situation, the time limit demand did not allow us to either decide whether we were going to deny or accept liability. And if you don't do it right away, you're almost accepting liability. So we are on a hook for $1 million for a claim in Washington that the guy did nothing wrong. So that's the one. Another one would be.
You have a question as well, Kevin.
Yeah, I saw that. When reviewing wording with customers, what coverages should be our main focus to review and be sure it's there for a customer? I know it's a lot, but what are the common conditions of coverages? It's a great question. This is what I would tell you. One thing that you want to make sure is that the description of operations on your declarations page matches what they're doing. That's the most important thing. It can go both ways, but you want to make sure that it matches, because the carrier's intention of coverage is really starts at the description of operations. So if you have a doctor, and this is a stretch, of course, but you have a doctor and the description of operations says management consultant, can you really expect the carrier to pay for any damages caused by the doctor, like any medical debt? No, you really can't. So make sure that is at least matches to a point. There's discussions on whether you want it to be exact or this kind of more broad. From my perspective, I think you would want it to be broad. The more that you type into a description of operations, it kind of narrows down the scope of coverage. A management consultant is more broad than a management consultant that focuses on productivity in healthcare organizations. That's a lot more restrictive, right? And at the end of the day, it's probably, the intent was probably the same initially, but you narrowed it. But just make sure the description of operations is there. Other coverages, and there are other sessions that will go through all the different coverages in a form, but the basics are, is defense inside or outside? So does defense costs subtract from the limit of liability, or is it in addition to? That's a big one. We like to write defense outside. We believe that is important. At times we'll pull them inside, but most of the time we write defense outside. But every carrier is different and every exposure is different. You're probably more apt to write defense outside in a situation where the exposure is less. And if you have exposure where there's more, where there's really a chance of having defense costs, whether it is like an A&E policy, you're going to see defense cost inside. So just know that part. I would also look towards the type of risk you're writing. So if it's, like we talked about before, an advertising agency, make sure there's intellectual property. If it's let's say it's a landscape architect, so maybe not your traditional architect, but maybe that layer underneath type, make sure there's a little bit of coverage in there for contingent bodily injury or property damage. So what that really is some bodily injury or property damage that results in professional services. Like if we go back to the beginning of the presentation, we said GL covers bodily injury and property damage, but it doesn't cover it if it's as a result of professional services. And professional policy forms say, hey, we'll cover you for your professional services, but we don't cover bodily injury and property damage. There's an endorsement that's available called contingent BIPD that kind of bridges that gap. So that's a situation where you would want that coverage. Another one is cyber or network security, cyber. So again, this isn't a cyber class per se, but a lot of these contracts require at least some type of cyber. And when I say cyber, there's first party, third party. I'm talking more first party, which is privacy breach expense. Some carriers give it to you, some carriers don't. I always think it's better if you have if you have some cyber in connection with your professional liability. Part of cyber is also network security privacy liability. That means that's your third party cyber. So why that's important is a lot of people that are consultants have access to their clients' systems. And if in some capacity they introduce some malicious code or some type of Trojan horse, things like that, that's where that third party cyber comes into play. So you want to look at carriers that give you some type of coverage for that. You want to also look at, is this a situation where you have a client that performs services both for a fee and not for a fee? So almost all professional policies say for a fee, services performed for others for a fee. But say you have that accountant that also provides services for his church and does it pro bono. Is there coverage for that pro bono service? You want to make sure that that is there. You want to look at retroactive dates. Retroactive dates are so a professional liability policy is a claims made policy where GL policies are more occurrence based. You want to make sure, so claims made means is that you only have coverage from the inception of a policy moving forward. You typically don't go backwards. So, and it has to be from when that claim happened. So if you move carriers from carrier to carrier, you want to make sure that there's never a lapse in coverage, because all of a sudden that coverage that they had for 5 years and they had claims made coverage for 5 years, if you switch a carrier and there's a lapse, there's no coverage anymore. That new carrier will start from inception unless they'll match the retro date. Most carriers will do it, most of them will, but you want to make sure if you do move policies that you get that retro date on the new policy. So I hope that helps. That's a couple things, but those are the things that when you ask the question jump to my mind. Oops, sorry about that. So let's sum up the difference between GL and E&O. So really, E&O is designed to ensure professional services rendered for a fee involving alleged economic damages, again, unrelated to bodily injury or property damage to a third party. So that's in general. As I said, there are situations where there is contingent bodily injury and property damage. If a business owner's primary services rendered is a concern is bodily injury or property damage resulting from exposures, you probably want to look for a GL form that's designed to cover those exposures. So that's kind of the gist of GL versus E&O. While reviewing a potential client's business exposures, it's important to look at all types of services performed and determine whether it's a GL or E&O exposure. So many companies are diversifying, so it can be challenging to determine what their true exposure is. Ask the question. And quite honestly, they may have both exposures. So maybe they need a blend policy. Maybe they need, I mean, of course, they're probably going to need GL and maybe they need E&O. Sometimes carriers, I know we do this, will write both together. So that kind of eliminates the gray area between, is it a GL claim? Is it an E&O claim? We don't care. It's a claim. We're going to pay it anyway. It doesn't matter. That's kind of how we look at it. Let me take a deep breath. Wow, that was fun. I don't get to talk much about E&O as a lot of things have been cyber lately, so it's really great to get into E&O. But does anyone else have anything else you wanted to ask E&O wise?
If anyone has any questions, we can get answers for you even after the webinar. So feel free to type in if you have any questions.
Absolutely. I'll end with this. This is always a question that people want to ask, and sometimes they don't. You know, what are the hot classes out there? I can tell you what's on my desk. I know it's going to be on my desk when I get back. Safety consultants is a big one. Again, the design build type of either consulting, whether it's interior design or A&E. Employment agencies is big, and anything in that digital marketing. Digital marketing is that hot term, and that is like 1 out of every 4 accounts I look at seems to be involved in some capacity in marketing or advertising or search engine optimization or something, you know, influencer marketing. Everything seems to be, you know, media based, but there's a professional service behind the media. So those are the type of things that I'm seeing. Again, employment agencies are always a big one. Tech is still big. You have your traditional, you know, property manager, real estate, which you know, CID is great for. Tech continues to expand. So those are the things that I guarantee when I get back to my desk, I'm going to have a litany of accounts to go through that are those exposures. I will also tell you that, and I mentioned this in the beginning, I'm seeing all types of exposures all over the place. And what it's really doing is challenging miscellaneous professional underwriters like myself to determine, well, hey, is this something that can be covered? Is there a professional service? And how much should we charge? And that's happening every day because it is contractually based. So feel free to shoot those questions to Lexi. Feel free to shoot them in and she can get me involved or any of her underwriters involved to see whether there is a marketplace for that. CID has a ton of markets that they can go to for all types of exposure. So just, you know, feel free to use them as your resource. The last thing I will say, and then I'll wrap this up, is the great thing about professional liability, I continue to say, is contractually required. And what's good about being contractually required is that not only do you quote things because it's contractually required, you bind. Our bind ratios are through the roof because they need this coverage. And not only do they need it for an extended period of time, not only as they're performing the services, but since it's claims made after the fact. So many of these contracts say you need professional liability today, and that policy needs to be enforced for 3 years after the project. hey, that's great. So what that means is high retentions. I know our E&O products at USLI retain at the between 85 to 90% across the board, which is phenomenal. And it's probably as high as it's ever been. So once you get the E&O policy on the books, it's just like, I'm not gonna say free money, but it's actually, commission earned for 3 or 4 years just for getting that policy on the books. And it's gonna grow. So that commission you earn today will most likely be more, next year, the year after, the year after. So, and there you have it. There is E&O at a basic level.
What a great webinar, Kevin. Thank you so much. I think it was really great. So
awesome.
let's go to the last slide, and I'll just thank everyone for joining us. Make sure that you visit our website, cidinsurance.com, and because there's lots of tools and all our applications are there, and you can watch webinars and sign up for new webinars. Also, Lexi is your go-to for professionals, so you have her contact information there, and you can find her on the website as well. If you have any questions, and you can definitely start submitting your applications today at submissions@cidinsurance.com. Thanks again for joining us. Have a great day.
Thanks, everybody.